Assalamualaikum warahmatullahi wabarakatuh. And a very good morning, members of media. Thank you for joining our virtual press conference today. Before we begin, we'd like to remind you that the content and the discussion during the press conference are embargoed until 12 noon. This includes posting and streaming on social media. Without further ado, I'll hand over the floor to Governor. Governor.
Thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi dan salam sejahtera. Pada sidang akhbar ini, Bank Negara Malaysia akan menyampaikan taklimat mengenai prestasi ekonomi negara pada suku tahun 2021 dan juga perkembangan moneteri dan keuangan di Malaysia. Taklimat ini turut dihadiri oleh Ketua Perangkawan Malaysia, Datuk Seri Dr. Muhammad Uzi Mahidin. Jabatan Perangkaan Malaysia ialah agensi rasmi yang mengumpul dan menerbit statistik KDNK atau GDP negara. Please allow me to continue the presentation in English. Global growth continued to improve in the first quarter of 2021. The improvement was driven by a recovery in the labour market that supported private consumption and the continued resilience in trade and manufacturing activities. Goods trade also recovered as most of the regional economies experienced a sharp improvement in their exports. However, the pace of recovery remains uneven. Some economies, such as the Euro area, tightened measures to curb COVID-19 resurgences, which weigh on their domestic services activities. Let me now hand over the presentation to Datuk Seri Uzi to present on Malaysia's first quarter 2021 GDP.
Assalamualaikum warahmatullahi wabarakatuh and very good morning. And thank you very much Yang Bahagia Datuk Governor, ladies and gentlemen. Thank you very much for having me for this session. Pada suku pertama 2021, ekonomi Malaysia merekodkan penyusutan yang lebih kecil 0.5% di sebalik pelaksanaan Perintah Kawalan Pergerakan kedua PKP 2.0. Pada asal bulanan, KDNK melonjak dengan merekodkan pertumbuhan 6.0% pada bulan Mac apabila Sekatan Pergerakan yang menghadkan pertumbuhan pada Januari dan Februari dilonggarkan. The smaller contraction was supported mainly by improvement in domestic demand and continued support from better external conditions. These factors more than offset the impact from labour shortage and site shutdown due to COVID-19 outbreaks. On the supply side, all economy sectors register improvement in growth. The manufacturing sector registered a stronger positive growth, mainly due to continued robust E&E production. The services sector recorded a smaller decline, while consumer-related activities were affected by the containment measure in the first 2 months of the year. The impact was smaller than what was observed in MCO 1.0, as most economy activities were still allowed to continue. Meanwhile, growth in the agriculture sector rebounded, mainly driven by expansion in livestock, forestry and logging, as well as other agriculture subsectors. The mining sector contracted at a much lower pace as both crude oil and natural gas production improved amid the recovery in external demand. Similarly, the construction sector contracted by smaller rate with the ramp up of construction works in commercial projects nearing completion, as well as continued implementation of small-scale projects. On the demand side, the growth was supported by improvement in domestic demand, particularly private sector expenditure, while household expenditure was affected by the imposition of MCO 2.0. The impact on household spending, however, was smaller compared to the MCO last year. Furthermore, household spending remained supported by various stimulus measures, including APF ICNA withdrawal subsidy. It was reported in the Laksana report a total of Rn 40.4 billion from ICNA program has been credited until 15 April 2021. Also, household disposable income is also supported by a higher commodity prices, where we can see the price of CPO recorded at Rm 3,953, which was increased by about 47.8%. Meanwhile, a rebound in private investment was driven by capital expenditure in new and existing projects, particularly in the services and manufacturing sectors. The recovery of investment on fixed assets were backed by the double-digit growth in machinery and equipment after recording a contraction for the past 9 quarters. Public investment declined at a smaller pace due mainly to higher capital spending by the federal government. On the external sector, the improvement in export and import were driven by higher external and domestic demand, respectively. The current account of the balance of payment registered a surplus of Rm 12.3 billion or 3.3% of GDP during the quarter. The good surplus narrowed to Rm 36.6 billion as the improvement in import outpaced export, in line with the pickup in domestic demand. Meanwhile, the services account recorded a larger deficit of Rm 50.0 billion due to construction, other business services, and continuous deficit in travel. In the income accounts, the deficit in the primary income narrowed due to other investment. The deficit in the secondary income account was due to outward remittances by foreign workers. Financial account in this quarter turned around to a net inflow of Rm 60.0 billion due to net inflows in other investment. Foreign direct investment FDI increased to Rm 9.1 billion as compared Rm 6.8 billion in previous quarter. The investment was primarily channeled into manufacturing sector, financial activities, and wholesale and retail trade, particularly from Singapore, United Kingdom, and Netherlands. Direct investment abroad, DIA, also registered a higher net outflow of Rm 7.8 billion, mainly in financial, mining, and manufacturing sector, mostly to Canada, Indonesia, and Singapore. With that, I end my presentation. Thank you. Let me now hand over the presentation back to Governor.
Thank you, Datuk Sri Uze. What is encouraging from the first quarter performance is that despite MCO 2.0, the economy recorded better growth compared to the fourth quarter of 2020. This reflects the improvement in domestic demand and the continued strength in external conditions. Going forward, improving conditions in the global and regional trade will support the demand for Malaysia's exports. Continued targeted policy support and large public projects are expected to provide some support to income and jobs in Malaysia. Importantly, most sectors are allowed to operate, thus supporting the recovery in labour market conditions. The performance of the export-oriented industries is likely to remain a bright spot in the Malaysian economy for 2021. The rebound in Malaysia's exports since the trough in second quarter last year is expected to continue. GDP growth will be supported by the recovery in Malaysia's major trade partners such as PR China, Singapore, and the US. In addition, Malaysia stands to benefit from the robust global demand for semiconductors to cater to increasing needs for work-from-home equipment, digitalization of businesses, and medical devices. The strength in global demand for E&E products is translating into stronger production activity for Malaysia, as our E&E industry is well plugged into the global value chain of products that are now highly demanded. Industry players also share this positive outlook. The bank's engagement suggests that a majority of the E&E firms had indicated expectations of higher export growth in the second half of 2021 compared to previous years. Despite the recent imposition of MCO in several states, it is important to note that MCO 3.0 is expected to be similar with MCO 2.0 in January to February this year. In terms of economic activity, most sectors are allowed to continue to operate subject to sector-specific SOPs. To limit movement, restrictions are imposed on inter-district and interstate travel, dine-ins, as well as social activities. Similar to MCO 2.0, the imposition of MCO 3.0 is mainly to curb social activities and reduce congregation and transmission, while allowing for broad continuity in economic activities. Looking at the actual performance of key economic and mobility indicators in January to February, the impact of MCO 2.0 is markedly smaller compared to MCO 1.0, particularly in the services and manufacturing sectors. Monthly GDP contracted by between 3 to 4% during MCO 2.0 in January and February this year, compared to an average decline of 17% during MCO 1.0 in March and April last year. As the restrictions under MCO 3.0 are similar to MCO 2.0, the impact on economic growth is expected to be less severe than that of MCO 1.0 implemented in 2020. Following these factors, Malaysia's growth in 2021 is expected to remain within the projected 6 to 7.5% range. Moving on to the labour market, indicators in the first quarter showed signs of recovery despite the imposition of MCO 2.0 in January 2021, as many businesses are allowed to operate. Employment rose further in the first quarter, while the unemployment rate decreased marginally to 4.8% in February and 4.7% in March. Data from Perkeso also saw smaller jobless claims over the quarter, with new job placement rates steadily improving since the start of 2021, indicating improving hiring and employment conditions. Going forward, while conditions continue to be challenging for some sectors with the imposition of MCO 3.0, overall labour market conditions are still expected to be on a recovery path. Going forward, targeted policy measures for households and businesses remain available and will lend further support to growth. With the reimposition of the MCO, the existing targeted policy measures will continue to assist vulnerable segments that are particularly affected by these developments. These include the measures introduced in the 2021 budget, PERMAI, and Permaculture assistance packages, as well as funds and schemes by the government. Furthermore, investment activity is expected to improve, particularly with the continued progress of key strategic projects. Major public transportation projects are progressing according to schedule, and the rollout of initiatives under My Digital will provide additional impetus to growth. Capital spending will also be lifted by the realization of committed private investment intention, especially in the services and manufacturing sectors. Going forward, as outlined under the National Investment Aspirations or NIA, it is critical for Malaysia to attract and realize quality investments that improve the country's productive capacity and generate positive spillovers. These positive spillovers can be through the creation of high-skilled jobs and integration of local firms into the global value chain. Digitalization continues to gain momentum to support the growth of the digital economy. For instance, the number of online banking and e-wallet transactions grew by about 50% in the first quarter this year compared to the same period last year. More merchants have also embraced digital solutions. Over the past year, the number of merchants adopting QR payments and e-commerce had more than doubled. To promote an innovation-led growth, the government has continued to roll out strategic initiatives to catalyze nationwide digital transformation. Besides fast-tracking enhancements to the national broadband infrastructure via Jendela, My Digital was launched to spearhead the growth of Malaysia's digital economy over the next 10 years. To position Malaysia as a digital hub for ASEAN, a digital investment office has also been established to strengthen coordination across all investment promotion agencies to attract high-value digital investments into Malaysia. While Malaysia's growth remains on the recovery path, the balance of risk to the economic outlook continued to be tilted to the downside. The key risk to the domestic economy is the ongoing developments surrounding the COVID-19 pandemic, including stricter containment measures arising from re-escalation of cases and disruptions in the vaccine rollout globally or domestically. However, there are some upside potential to 2021 growth outlook, such as higher than expected exports to major trade partners, as well as ramp up in production from existing and new manufacturing facilities, and the stronger than expected impact from policy support. Headline inflation turned positive to 0.5% in the first quarter. This was mainly due to the base effect from fuel prices and lapse in the impact from electricity tariff rebates implemented last year. Meanwhile, core inflation slightly moderated to 0.7%. For 2021, headline inflation is expected to average between 2.5 to 4%, primarily due to the cost push factor of higher global oil prices. Headline inflation is projected to temporarily spike in the second quarter, mainly due to the lower base from low retail fuel prices in the second quarter of 2020. More specifically, for the months of April and May, headline inflation may rise to approximately between 6.5 and 7%. However, this will be transitory, as headline inflation is expected to moderate to below 5% in June and continue to moderate thereafter as this base effect dissipates. Underlying inflation, as measured by the core inflation, is expected to remain subdued, averaging between 0.5 and 1% for the year, amid continued spare capacity in the economy. The outlook, however, is subject to global oil and commodity price developments. The OPR was maintained at 1.75 at the recent May MPC meeting. Monetary policy in 2021 will remain accommodative to support the economic recovery while ensuring price pressures remain manageable. The bank also remains vigilant against a build-up of financial imbalances. Given ongoing uncertainties surrounding the pandemic, the stance of monetary policy going forward will continue to be determined by new data and information. In view of the higher headline inflation being driven by supply-side factors, monetary policy as a demand management tool will not be appropriate to manage this. The bank has been and will continue to utilize its policy levers as appropriate to ensure the right mix of policies in supporting a sustainable economic recovery. Domestic financial market conditions were affected by both external and domestic developments in the first quarter of 2021. On the external front, the rise in long-term US Treasury yields and the consequent strengthening of US dollar led to an increase in long-term bond yields and depreciation of currencies in other advanced and emerging market economies, including Malaysia. Domestic equities declined due mainly to uncertainties surrounding COVID-19 developments globally and domestically. Since April, however, the ringgit has appreciated against the US dollar amid broad US dollar weakening. Meanwhile, MGS yields have trended lower, reflecting the recent decline in US Treasury yields and further supported by positive news surrounding Malaysia's retention in the FTSE World Global Bond Index. Going forward, domestic financial markets will continue to be exposed to intermittent periods of heightened capital flows and exchange volatility as uncertainties remain on the momentum of global and domestic economic recovery. This includes the risk of rising US Treasury yields lingers amid emerging signs of a faster pace of US economic recovery. Net financing expanded by 4.7% during the quarter, supported mainly by outstanding loans which grew by 4.3%. For the business segment, both disbursements and repayments remaining above the 2017 to 2019 average levels. Of note, SME loan disbursement and repayments also returned to pre-pandemic levels. For households, outstanding loan growth increased by 6% compared to 5.4% in the fourth quarter last year, with the purchase of cars and residential properties being the main drivers of household loan expansion. Demand for household loans remain forthcoming amid the accommodative monetary policy environment and various economic stimulus measures. SMEs continued to access financing from financial institutions, with outstanding financing expanding by 10% in the first quarter of 2021 on the back of conducive disbursement activity. The financing ecosystem has also been strengthened to complement bank financing in supporting SMEs through the pandemic crisis. In particular, the Banegara Fund for SMEs still has about 5.2 billion ringgit available, aimed at facilitating economic recovery and increasing productivity of strategic sectors. Financing referral platforms and guarantee schemes have also improved SMEs' financing seeking experience. For instance, the IM SME online financing referral platform has led to about 340 million ringgit loan approvals for 3,500 SMEs since it was first established in 2018. CGC guarantees grew by 25% in 2020, with 12.5 billion ringgit in outstanding guarantees that have benefited almost 40,000 SMEs. As for debt advisory and debt resolution, SMEs with loan concerns can also reach out to MyKNP or seek loan R&R assistance under the Small Debt Resolution Scheme, now integrated under AKPK. The banking system remains resilient and well-placed to support the ongoing economic recovery, given the strong financial buffers maintained by banks. The credit risk outlook, however, remains challenging, as some borrowers continue to face challenges in meeting their financial obligations amid the uneven economic recovery. Help continues to be available to those borrowers as banks continued to extend repayment assistance in the first quarter of 2021. As at end March 2021, the share of household and businesses loan account requiring repayment assistance stood at 11.4% and 10.5% respectively, as most borrowers have resumed loan repayments. Banks also continued to build up provisions during the quarter in anticipation of credit losses. However, the preemptive provisioning carried out throughout 2020 is expected to temper the extent of new provisions required. Let me now conclude the briefing. The Malaysian economy recorded a better than expected growth in the first quarter this year. This momentum is expected to provide support to Malaysia's growth going forward, especially on the back of a recovery in domestic demand and strong external conditions. While the reimposition of the MCO will weigh on growth, the impact is expected to be less severe as seen during MCO 2.0, where most economic activities were allowed to remain open. In addition, the continuation of key infrastructure projects and targeted policy support available to both businesses and households will help mitigate the adverse impact of the containment measures. That said, the path of recovery will be gradual and uneven across economic sectors, and it may even encounter speed bumps along the way. However, given the factors supporting growth, our assessment is for the economy to continue to recover in 2021, with growth ranging from 6% to 7.5%. I would like to take this opportunity to wish everyone a Selamat Hari Raya. And with the first of Shawwal upon us, I would like to stress a couple of messages unique to our current situation. Firstly, let all continue to adhere to the SOPs and observe the 3 Ws and avoid the 3 Cs. Secondly is vaccination. Please register via My Sejahtera app and help the nation achieve herd immunity faster. Lastly, I would like to take this opportunity to remind everyone to be careful not to fall for financial scams. There may be very nice gifts offered, or there may be calls allegedly from authorities, including the police or Bank Negara. So keep yourselves updated by following our Amaran Scam Facebook page on the latest tactics by scammers. So akhir sekali, bagi pihak Bank Negara Malaysia dan rakan-rakan saya di sini, saya dan rakan kerja Bank Negara Malaysia ingin mengucapkan Selamat Hari Raya Aidilfitri. Maaf zahir dan batin.